We welcome in Matthew Peterson, Senior Product Manager, Schwab International. Good morning. Thank you for being here. I was just saying how all these prints coming in. We got in GDP, ADP, PCE, your core, non-core. Every single one of them came in slightly less than the expectations. I mean, when you think about GDP, for example, and these are the kinds of things that, the Fed's watching. I mean, what are your thoughts on some of these prints?
Well, the first time I was here back in March, we talked about the probability of recession, and we talked about the Fed, the New York Fed, and the metrics that they use to take a look at the inverted yield curve and treasury spreads. And at the time, the probability of a recession in the next 12 months was at about 57%. That number at this point is up to 66%. So for all you degens out there, that's minus 200 odds. So 66% chance of a recession happening in the next 12 months. So I have two working theories of what that might mean. First, in a traditional sense, we have not experienced a recession yet. There are obviously economic indicators, including the recent news that has come out, that would suggest that is likely at this point, considering it's over 50%. But the other working theory is that something that Liz Ann Saunders, our own at Schwab, has talked about, the idea and concept of a rolling recession. And that really, at the heart of that, is the idea that over the past few years, we've already experienced recessions, not necessarily in the traditional sense, like in 2008, when the financial collapse triggered a total recession. But kind of these staggered or sector or industry-specific recessions. And I think that's what we saw.
We saw it in housing. We saw it in energy. Though housing is trying to give it a go again, things like that. Oil's back above $81. So, it sort of leads you to believe what's next in the rolling recession.
Right. And I think hindsight's 20/20 as far as what's next. I think housing is really interesting. Because you have competing factors like low inventory, but also high rates. So it'll be interesting to see how that shakes out. I don't know that we've necessarily seen the worst of it in the housing market. The way we've seen things like auto and oil recover a bit is a little bit more encouraging. But as far as trading strategies that one might look to use in this type of environment, I've always been more of a fundamental investor as opposed to a day trader, technical investor. But I think there are strategies that kind of fit into the middle between something that's completely passive and day trading. And when we talk about general strategies, typically portfolio strategies will fall into either strategic strategies or tactical strategies. And tactical strategies are the ones where either a personal investor is doing it for themselves, or a professional investor has a lot more leeway to play with the allocations to different asset classes and sectors. And I think those type of strategies, if employed, if executed correctly, could be very worthwhile in this type of environment.
All right, and just quickly on global diversification, because I do want to get to the Bitcoin story.
Sure.
Thought there.
Global diversification, similar to sector or industry-specific strategies, it just provides the ability to take advantage of some of these asymmetrical opportunities in the market.
Was there something specific you were watching, or you're just suggesting that global diversification is a good idea?
It's more just a general idea. Right.
Understood. Okay, let's get to what's going on with Grayscale. And now, they petitioned to the appeals court for their ETF, for this Bitcoin ETF. There are 8 or 9 other ETFs that may all get approval, right? You have BlackRock, you have Invesco, you have Fidelity, and Van Eck, and, right? And so it's an exciting time. We saw Bitcoin jumping to 28,000. What are your thoughts here?
Well, Grayscale is a trailblazer. They're the one taking on the risk and the possibility that it might not work out for them, but there are going to be a lot of fast followers in that market, absolutely. And for those that might not be as well versed in the Grayscale structure, the way it works, it's a closed-end fund. So essentially, when someone invests in Grayscale, they're buying into a basket or a pool of Bitcoin. But typically, because of the risk associated with it and the potential illiquidity, the price, the market value of Grayscale has traded at a huge discount to what the intrinsic value of the Bitcoin in their portfolio is. So where the opportunity is as we get closer to the ETF conversion becoming a reality, we would expect that discount to narrow. And that's why we saw one of the big jumps yesterday. And they're still trading at about an 18% discount. So should things continue on a positive momentum by the time it converted to ETF, we would expect that discount to narrow and go away.
Yeah, I mean, it's been a lot of fun to watch, and it gave a nice boost to names like Bitcoin. To Coinbase, for example, which was one to watch yesterday. Okay, well, we'll continue to follow the story. Matthew Peterson, great to see you. Thank you so much, of Charles Schwab. Thank you for being here.